A CD stands for Certificate of Deposit. It's a type of savings account with a fixed rate and term. You might be wondering, are CDs better than traditional savings accounts? What's the downside of using them? And what should you look for when you're comparing the different options? Here's what you need to know. First, CDs are different from traditional savings accounts. They tend to have higher rates, more comparable to high yield savings accounts. And the longer term you choose, the higher the rate tends to be. CD rates are also fixed once you open one, while rates on savings accounts can fluctuate over time. That means CDs give you guaranteed returns. They're also FDIC insured, and that just means your money is safe. But there is a downside. CDs require a lump sum upfront, usually a one-time contribution. This is money you shouldn't need to touch for months or even years. CD terms usually range from 3 months to 5 years, and you can pick which time frame works best for you. If you end up needing the money earlier, you can face an early withdrawal penalty. For example, if you have a 2-year CD and you take it out after 7 months, you might have to forfeit 6 months worth of interest. That can really eat into your savings.
Let's look at the different types of CDs. Most function like standard CDs with 1 or 2 differences. High-yield CDs offer some of the best interest rates. A jumbo CD has a high minimum deposit, usually around $100,000. A no-penalty CD lets you withdraw early for free. An IRA CD is a CD within an individual retirement account. A step-up CD lets your interest rate increase during the term. Add-on CDs give you the chance to add contributions over time. A brokered CD is bought through an investment firm. And foreign currency CDs tie your money to the value of foreign currencies. Which should you choose? The purpose of CDs is to earn interest on savings, so focus on rates first and then make sure the terms match your needs.
When comparing your options, you want to focus on the annual percentage yield, or APY, which is the rate of return that you get on your money. Not every bank offers competitive rates on their CDs. The highest CD rates tend to be at online banks and credit unions.
CD rates currently have the lowest APYs in decades. In 2019, some online banks and credit unions had 5-year CD rates of 3% or more. And today, a good rate on a 5-year is around 0.7%. How did this happen? In March 2020, the Federal Reserve slashed rates to nearly zero. When the Fed changes its rates, banks and credit unions generally take their cue to do the same for CDs. They likely won't raise rates until the Fed does, which could take a while, so you won't find the highest yields of all time anytime soon. But you can still lock in competitive rates that might be enough to help with your goals. At NerdWallet, we have a CD calculator that can show you how much interest you can earn based on your deposit, CD rate, and term length. Typically, the longer the term, the higher the rate. So if your time frame to get your money back is flexible, going for a 5-year term instead of a 3 or 4-year term might earn you more money.
Customer service is another big factor to consider. Think about giving the bank a call and see how helpful they are answering your questions. It's a big red flag if it takes an hour to get on the phone with someone. One of the big reasons people switch banks is bad customer service. Here's a bonus tip. You might want to consider creating a CD ladder, which means opening up several CDs that mature at different times. Maybe one in 1 year, another in 2 years, and a third in 3. That way you have regular access to your maturing CDs. We have articles all about CD ladders if it's something you're interested in learning more about. Also, make sure you keep track of your CDs. I often get questions from people that have no idea where their CDs are because they've lost track. CDs are a type of account that people hold over several years, and you just want to make sure you don't forget where your money is or how to access it. Sometimes CDs auto-renew when the term is up if you don't withdraw the money. Now that you understand how CDs work, you know that investing in a CD isn't the fastest way to grow your money, but it does offer a guaranteed return and safety that money in the stock market doesn't have. I'm Kimberly Palmer, personal finance expert at NerdWallet. One of my favorite things about CDs is that it's a gift you often hear of grandparents buying their grandchildren. It's a great way to teach kids about compound interest and the importance of saving. Any questions? Please leave a comment and don't forget to subscribe.